Hey, welcome to the Closing Beat. Happy Friday, everybody. How you doing out there? Hope you're having a good day. It's going to be a wet few days here in Florida. We got rain today, I think through the weekend, and then apparently 2 hurricanes doing their thing coming up their way. So Monday or Tuesday, if you don't see us, we're probably safe and fine, but we may not be able to do the show if it's really loud or if it's really windy and we all got to stay home. So just a heads up on that. If you don't see us, you'll know. Maybe we'll put something on Twitter or Instagram if that's the case. But for now, hopefully they just go the other way and we don't have any problems. Welcome to the Closing Beat. This is our stock market update show where we cover all the different things in the stock market. Got a lot of cool things to share with you here today. And so I hope you enjoy. We'll go through everything, and then if you have questions, we'll take questions at the end and see what we can do there. If you're looking at the stock market, you basically got a strong finish to the week in terms of having a gain wrapping up the week. However, it was pretty much led by just a few stocks, and this is going to be the highlight of today's show, or the sort of the theme of today's show. I'm going to go over all kinds of great, good, geeky stats for you. Try to keep it short and let you guys go enjoy your weekend, hopefully drier where you're at. Democratic National Convention is over, so that part's done. We got one more to go. Republican National Convention, doesn't matter which side you land on there, you know, once it's over, we can get down to the race and maybe a debate. I like the debates personally. I mean, I think no matter who the president is, every 4 years you should have to go through an interview, and that to me involves a debate. So we'll see what happens there. I don't know if they're going to do many debates this year, but we'll see. So that's coming up next week, and of course that'll be the topic of that week and everything. But markets did okay, right? No real response, nothing really exciting out of that. If you take a look at the Dow, you got a slight gain on the day, S&P slight gain, NASDAQ slight gain, and the Russell 2000, a little bit of weakness there. Small caps across the board were weak today. We'll cover that. Here's what I want to talk about today, and I want to kind of go into this just a little bit. The FANG stocks, which are your Facebook, you know the drill, right? I don't have to teach you that. Facebook, Amazon, Apple, Netflix, Google, and then Microsoft. We include Microsoft in the mix there as well. Apple had a great day today, obviously, very good day, up 5% on the day. The FANG stocks are now literally the NASDAQ 100. Let me explain. NASDAQ 100 up 0.75% today, hitting new all-time highs. It's been very, very strong. If you take those 6 names, Facebook, Apple, Amazon, Netflix, Google, and Microsoft, you put those 6 together, in the NASDAQ 100, they now make up more than the other 94 stocks, right? So, meaning in terms of weight. So if 94 stocks, other those FANG names, in the NASDAQ 100 were down 1%, or 2% or 3% or whatever, and those 6 stocks were up 1/10 of a point, 1/100th of a point more than those 94, those 6 stocks would cause the index to go higher. We saw that over the last couple days where the indices were higher, but not because everything was doing well, just because a handful of names were doing well there. The FANG stocks plus Microsoft now account for just over 50% of the NASDAQ 100 as of today, thanks to Apple and everything what happened there. So very, very impressive there. Now, what I want to point out here with Apple, if you own the stock, you got obviously the split coming up and everything, but the rate of change for Apple over the last 20 days is greater than any other period in the last 11 years. So you got to go back to 2009 to actually find a moment in time where Apple moved higher, faster than what it is currently done. So very careful there. If you own Apple, you own the NASDAQ, you now own something that's going off the rails. I mean, it's a good thing. You're making probably profits. Everything's great. We own it here, so we're happy. But it's going off the rails in terms of how fast it's moving. The rate of change is a big thing that people look at. This is now something that is not happened in a long time. Probably some of you for the life of your trading there. So be careful with that one there. Also, because of how much those stocks moved today, particularly Apple, which I already have up on the screen. Tesla, which had a good day in the NASDAQ, obviously, it's a good day, $2,050, can't complain with that. Tesla would have had to have gone up 8 times more than what Apple did in order to have a greater weighting on the NASDAQ 100. Can you believe that? It would have had to have gone up 8 times more than what it did to outpace the weighting of Apple on the NASDAQ. That's where we're at with this. Those 6 stocks are controlling so much of what's going on out there. What happens when those 6 stocks take a break? They will take a break. It's going to happen, so be ready for that. Moving on over to the S&P 500 real quick to take the same approach, and I've got something to share with you here. Your FANG plus Microsoft accounts for almost 25% of the entire S&P 500. It's good news if you want the S&P to move higher, right? Bad news if you're looking for a lot of new highs or you're looking for strength elsewhere. Take a look at this here. So we'll go over to this little data point for you. Well, we'll come back to this guy, but look at this. Here is the FANG plus Microsoft sort of stats here. I've got all of them listed in alphabetical order, apparently. And so you've got the NASDAQ 100 weight. The average weighting is 7%. Times that by 6, you're very near 50% in the NASDAQ, right? So in terms of the average. We go over here, the 1 month alpha. In other words, what I'm trying to report here is how much more did these stocks gain on a percentage basis than the market. Apple beats everything, 15% more, almost 16% more than the markets did. So outpacing by 16 percentage points. The average FANG stock is outpacing by 5 percentage points, median 2.3. Year to date, holy cow, right? 56% more percentage points than if you invested in the index, 45% on average, or median, by the way, if you're looking at these stocks there. They've obviously had great killer moves there. And hey, the scroller thingy stopped at the bottom again. All right. So great year-to-date moves there. But off to the far right, what I put is how far they're extended. Anything over 25% is considered overbought in this case. Apple, severely overbought, 55% more extended than it usually is. So flashing the red at you, color coding, in case you weren't familiar with what this means. Amazon, very overbought where it stands. Almost everything is very overbought where it stands, and those 6 stocks are moving the market. So if those 6 stocks are moving the market, what happens when they take a break? I'll leave you with that to think about over the weekend, but that's all I wanted to highlight for you, so hopefully that helps. Anyways, here we go. Let's look at the Dow and then move on to all the other good stuff for the day. You've got the Dow, obviously higher on the day, about 0.5%, just over 0.5%. Over half of the day's gains, by the way, came from Apple. You catching a theme here today on this show? Over half of the day's gains came just because of Apple. Meaning if Apple was down on the day, the Dow would have been down on the day. It had been down a little bit, but if it was down on the day, that was the case there. That's crazy. Now, this sort of weighting in the Dow is going to change after they do their split. Apple will go from the most heavily weighted stock in the index to the 16th weight, well, now almost it'll be the 15th weighted stock in the index. So this sort of weight that it has on the index is not going to stay the same there, but that's the case there. Did a class for clients, by the way. If you're curious or you just want to go in there and dig around a little bit, you go into the dojo if you're a client, go into the research center if you are not. For customers going to the dojo, how the 4-for-1 split is going to affect your investments, but we also covered how it's going to affect the Dow and kind of broke that down for you, and the S&P to give you a cool little lesson on that one if you're interested for that one. And one last little stat to put you in line here today. Boeing was down 1.2% on the day. Boeing could have been down 10 times more than it was down today, and the Dow still would have been positive thanks to the gains in Apple. Gives you an idea of how much weight, how aggressive, how much pull Apple has in the Dow. Very, very impressive there. All right, FinTips videos. We've got a lot of great FinTips videos this week. They're all free. They're public on our YouTube channel. Check them out there. Really appreciate all the support from those. We did large cap stocks, dividends in terms of focused on volatility, so you learned something new there. We did retirement plan for a 54-year-old. You might want to check that out if you're of a certain age and have some money saved up. We also did today 4 retirement tips for small business owners, just so you guys don't get caught up in some of the traps there or get in some of that mindset there. Last night, our class for customers was on warrants. Really kind of a cool class there since we now own warrants in one of our portfolios. And in the research site, you got to check it out. Just a lot of cool stuff going on. If you can't be a customer, we really appreciate the support. It's $13.99 a month. I will not let you down. All the good stuff that we share here times more. All right, so we'll share more of it there with you. All right, let's go over, hey, real quick, your 401ks on the week. Where were we on that one there? Did we get anything there? Your 401ks for the week, here's where we ended up. Large cap growth is your best performer for the week, up 1.5%. Second best performer is going to be small cap growth. The performance came in the growth category this week. Your worst performers overall were mid cap value and small cap value. They had a little spike throughout the week there. They just couldn't hold on to it. Moving on over to the sector breakdown. Let's take a look. Okay. Everything I just mentioned, look over to the right-hand side of your screen. You see how some sectors are green, some sectors are red. How could that be? The S&P was up today. Everything was strong. That's because those 6 FANG stocks were really leading the way. And here's a further way to explain it. You got tech, best performing sector of the day. Hands down, best performing sector. There's no other way around it there. And now you know why, right? Apple was largely the majority of the gains in the tech sector. Honorable mention, NVIDIA had a great day after reporting earnings the other day, getting back to new all-time highs as well. On the downside, your worst performing sector was energy. Energy lost 0.63% on the day, and then that was because of Chevron. You got Chevron actually finished positive on the day just a little bit. ExxonMobil down on the day. Those are your drags overall. Energy, by the way, lost 6% on the week, remains the worst sector of the year, down almost 40%. A little bit less now that it had a rally there through the end of the day. And that's pretty much it. Look at the rest of the sectors on the right-hand side of your screen there. You can see they didn't do a whole lot, right? So if you're looking at your 401k this week, you're looking at 403bs, your retirement plans, and you go, what happened? I see all this excitement on TV. The markets are up. My 401k barely moved, or maybe even went lower if you're energy focused, industrial focused, things like that. Well, that's going to be because those sectors didn't do anything. The headline news is FANG Stocks. Yay, everything's going well. But everything else kind of just had a blah kind of a week there. So something to keep in mind, keep in consideration there. I do want to point out home builders today. 1.5% higher today. Existing home sales rose rather sharply there. The housing market continues to be really strong. If you take a look at something like Toll Brothers, they continue to do well. Dr. Horton, DHI up to new highs all of a sudden. They're doing really good. And Pulte Homes about to hit new highs as well. I'll put in Lennar because that did hit 52-week highs as well. This sort of highlights everything we talked about this week, whether it was in this class, in the research center, giving you all the home builder data. Check out our class yesterday, obviously really focused on the home building category there. So I try to do that. If I could point out stuff ahead of time or right as it's happening, gives you an idea of what to look at. So this week was largely spent on looking at things like that. Hope you enjoyed that. Moving over to your new highs, new lows for the week. For the day, actually. 25 new highs on the day. We'll start with Intuit. Intuit hitting new highs. That's that breakout we've been talking about there. Very strong, looking good. Volume's high. It's consistent. When volume is consistent, that means you have more people that believe it is also going to continue this breakout. That's a good thing, not a bad thing. We already mentioned NVIDIA. That's going to be the earnings-related excitement. Volume, highest that it's been here in some time. Over the last 2.5 months, that's the highest volume we've seen on NVIDIA. People chasing that stock or rebalancing towards that stock as well. That could also be the case. Dr. Horton, that's going to be higher because of those home building numbers that came out, existing home sales. Real estate's on fire. That's another thing we're talking about in the research section as well to help you out with that. You can't argue with Chipotle. Holy cow, Chipotle just continues its consistent, steady little uptrend there. Looking nice and strong. They've done well through the virus, right? You can't really complain with Chipotle. Sherwin-Williams, that's the breakout there. Also getting the benefit of the Sherwin-Williams getting the benefit of the existing home sales, real estate taking off, the new home purchases, your refinances, all that to remodel. So Sherwin-Williams looking really good there as well. And no new 52-week highs or lows on the day. So we will move on over to our watch list if you guys are interested in that, because we're going to talk about something completely different, which may take us into next week here. The watch list. Okay, so you've got names like Abbott Labs, right? We're focused on interesting stock patterns here. You'll notice that they're all in the healthcare space today. If you remember earlier in the week, we said, hey, healthcare is hinting at breaking at new highs here. Now, there's a chance that it's going to be a little bit because we're sort of vaccine related, being patient on the vaccine, being patient on some of the stats. Virus numbers are coming down all around the world except for Spain. Unfortunately, they're not looking very good. But other than that, you have people waiting for good, positive, strong momentum type news out of the virus. And because of that, healthcare sort of remains sideways. However, if it does start to wake up, does start to break out, and we recognize this is a relatively strong sector compared to everything else, what stocks should we look at? So I put a little list together of interesting patterns. Abbott Labs, this happens to be a very similar pattern to the healthcare sector, looking at a little bit of a breakout today, and in general, just looking strong there. So Abbott Labs may be a consideration. These are alphabetical too, aren't they? Cerner. Now this one's maybe a watch list, kind of a not right away type stock, but if you take a look here, you got a series of equal highs. It's starting to reverse course as of today. If it goes and challenges those highs and the volume starts to wake up, that could be a stock you might be interested in there. If we go to Edward Life Sciences, very tight consolidating pattern here. What's most interesting is in the very, very short term here, right here over the last 6-7 days, notice how there's no selling. And maybe that changes, I don't know, but right now there's no selling, meaning nobody wants to get out of this stock. Nobody's also interested in buying a lot of this stock yet. So it's kind of floating around there with no real bias. Gets above this number here, call it $80. All of a sudden you have a recipe for people to think, all right, round two, let's get things going there. So Edward Life Sciences sticking out. There you go. Not a very cheap stock here, but ISRG, Intuitive Surgical, basing right at those highs. Looking strong, holding up tight. Same concept as Edward Life Sciences, showing you that it's strong, showing you that there's no sales there. You could also tell by the volume. There's not a lot of people interested in selling that stock right now, so maybe that's an idea. Thermo Fisher took off here without us today. Sorry, I do these lists at night. Thermo Fisher breaking out today, 1.5% gain on the day. Obviously, it's a very strong one. You can see that what we're seeing here in real time is what you hope happens on some of the previous ones that I shared with you. United Healthcare, I just kept mentioning, I like this pullback. Right, so it broke out to new highs, everything looking good. I liked that it was pulling back, and today other buyers are starting to share in that same mindset there, that it's finding support and trying to get a little something started. You can see the buyers in there, and down here at the bottom, you can see the volume picking up just a little bit. So maybe something you like. And then lastly, we got Zimmer Holdings here. Not great. But there wasn't a whole lot of great ones, so I wanted to give you the best of the best. Series of equal highs here right around 139.50. If it tries to reverse course next week, then what you would see is, this is kind of a detailed one. You had this pop right here, right? Real strong day, and then it went quiet. Well, as long as we don't erase that pop back here from the 7th, then you would assume that all these bulls are still bullish. And so if we break to new highs, they would get excited. They'd want to participate more, add more shares. There'd be new rounds of buyers in there. And so that's consideration, maybe something you want to look at there. Stocks in the news will be our last thing, and then we'll wrap it up here. If you have questions, feel free to ask those questions, and we will take a look at some of those questions, see what we can do there overall. But we'll do the stocks in the news. Going to be Tesla. Tesla obviously having a great day today, 2.5%. It is known as the day of record for Tesla. Where if you own the stock as of today, you will be getting the split adjusted shares, or the extra shares once they split. If you own it anytime between now and the 31st, you will also be getting it in there as well. And if you own it after the 31st, you will just be participating at the new split adjusted price, which will take effect on August 31st. Is that a Monday, I believe? August 31st at... August 31st is when that takes effect there. Interesting little stat, if Tesla was to be included in the S&P 500 today, it would be the 9th largest stock in the S&P 500. In the last 10 days, it went from a $256 billion market cap to $382 billion market cap. It grew past JP Morgan, it's bigger than JP Morgan, Home Depot, MasterCard, Procter & Gamble, Walmart, United Healthcare. All in just the last 10 days, it beat all of those companies in terms of size. And for fun, at this pace, just did a little math for you here, at this pace, by the first week in October, so a little over 1 month from now, it'll be bigger than Visa, Johnson & Johnson, and Berkshire Hathaway, if for some reason it keeps the same pace. It will not, by the way. So I thought that was kind of interesting there. And if that's next week. At this pace, it'll be bigger than Visa, Johnson & Johnson, and Berkshire Hathaway next week, not in October, next week. By the first week in October, I wrote down, it will be $1 trillion. If it kept this pace, it'd be a $1 trillion company. It's not going to keep that pace. We can have a friendly bet, right? It's just not going to keep that pace. But anyways, Tesla in the news, and rightfully so, had a good day. Moving on here. You got Delta. The company says that it's going to test every single employee for the COVID virus and the antibodies as well. That's going to be a little bit pricey there, so the stock's down just a little bit, but good for them. John Deere up higher on the day, 4.4%. That's going to be earnings related. Great earnings, by the way. If you happen to be looking at this stock, they are beating Caterpillar. They are just firing on all cylinders, and they raised their guidance going forward, so good for them in terms of the earnings there. I like that report. We happen to own it, so I'm excited. Ross Stores down just a touch today overall. Ross Stores beat by 15 cents. Revenue's better than expected. Not as much volume. There's just not as much people out there shopping. So it was an adjusted earnings there, and nobody fell for it. Let's just put it that way. And Pinduoduo reported earnings as well. They don't make any money, so it's not earnings. They reported the overall metrics of the company, and stock was lower. It's getting added to the NASDAQ 100 next week, I believe on Monday. Yep, by Monday it'll be added to the NASDAQ 100. Stock was lower today by 13.5%. I'll take your questions here if you happen to have any. We'll see what we can do, and then call it a week, and hopefully you guys learned something today. And let's see. I'll try to change everything over and get ready for that if you happen to have any questions. Questions. Is it working? It's not working. Okay. There you go. What are your thoughts on Dropbox? Why is it lagging overall? There's not a lot of competition for Dropbox in general. Obviously, there's Box, and then there's Dropbox, right? One focused more on retail, one more focused on the corporate environment. That'd be Box, by the way. Dropbox overall, just not really that it's performing badly, it's just not performing as exciting as the markets. And there's a lot of stocks that look like that right now, where you think, my stock is lagging behind the market. No, your stock is lagging behind 6 stocks. It may be performing in line with all the other stocks out there, but the headline is those 6 stocks as we covered in the beginning. So don't feel bad about Dropbox. If it goes under the 200-day moving average, you might want to feel bad. Then it'd be a little bit weaker and nasty. Is Apple a buy before the split? No. I can't tell you what to do, I guess, but no, right? I just covered how the rate of change for this stock, meaning how fast it's moving up, is well beyond anything that it's done any time recent, right? 2009, the last time it did this. 2009, the last time it did this, it fell, right? So careful. You are way overpaying for a stock if you go and chase this stock today, and more than likely you're going to be sorry. It's going to hurt. Tony Hawk should know better than that. All right, let's take a look at a few other ones here. Aren't growth stocks just a Ponzi scheme? The company offers investors nothing. What about the growth? I don't get it. I don't agree with that. Or in Apple's case, a little dividend there. But yeah, if it's a growth stock and you're getting rewarded for the returns you're earning on the stock, the growth, then why should they give you anything? Or maybe you disagree. I mean, it's a fair argument, but hey, if you're making 50% over on Apple, would you have rather them have you give you a 4% dividend? No, come on. JD.com got more room to run. I would argue that it's a little extended in the short term. You'd expect to see that thing pull back maybe a little bit next week. Look, it's just extended, right? Had a great run this week. If you waited 1, 2, 3, 4, 5 strong days to decide to buy it, you waited too long. And that's okay. I mean, maybe it's a watch list item. Maybe you say, I'm not going to pay, twice the average cost that I would have normally paid. I want to let it pull back or calm down. Put it on a watch list. Come back to it. Check it out another day. Yeah. There you go. Thoughts on oil? Oh, no. Are you talking Ollie? Yeah, Ollie's Bargain Outlets. Yeah, we happen to own this one here, too. It's a great recovery. I mean, it was kind of like Stamps.com for a while. It was a rough one, but a very serious recovery. We're happy to have that recover. Anybody that owns it's happy to see it recover. You got a reason to believe it a breakout here. The reason I don't like it, if you were starting a new position, volume. There's nobody that's very excited about buying this stock. It hasn't come up on radars yet. See how the volume is nice and quiet? You want to see a volume spike on something close to a breakout. We don't have that there. That bugs me a little bit for that one. So, yeah, I mean, it'd be like a tier 2 kind of watch list thing if you rank them. Wells Fargo, you could argue both ways. The question is Wells Fargo a potential long-term investment? If you're thinking long-term and you buy into the turnaround plan and the reputation turnaround plan, things like that, okay, you can't argue with $23 a share. You will look back someday and laugh at how cheap this was. So I buy that. I don't know that right now is the time to buy it. Nobody else is really buying it. It's just floating lower and lower. Give yourself a reason to buy it, meaning give yourself a reason to believe that other people are joining you at the same time you buy it. There's a little comfort in that, right? If we all jump off the bridge and you look for a minute and everybody, it's good, then you can jump too. But don't be the first. That's a tough one. Time for a rebalance there. I love it. Looking for a pure play on a mortgage company, stocks, not banks, to compare to recent IPO RKT. Well, if you're are you looking for that? Is that what you want? It's not out yet, right? In terms of being something that you really can trade. You can't tell, right? That's something you should trade. But this is a good. I mean, I have no arguments with this one here. So, yeah, I don't know that there's any more interesting way at the moment. You get technology, you get the mortgage company, you get a brand name, things like that. Unless you feel like you missed it or something. I'm not sure I understand the full question there, but sheesh, welcome. Dustin can't be fair to compare technicals like you mentioned about Apple and to try and assess future probabilities when technical charts don't highlight the Fed pumping that's going on right now. Absolutely they do. Yeah, no, they 100% do. And this is a fun lesson that's taught in financial engineering classes in colleges is what is the effect of the movement on a price of a stock given the current news and events that are going on? How can you compare that to something in the future, or in the past, when this time is different? And in reality, this time is not different. Every study, everything finds this out. That's the trick. If you're in like a financial engineering program at any college, the reality is there's no difference now than there was in the past. There's always something in the past that moved things. There were always times where the Fed was inputting money. Look at 2008, 2009, things like that. There are always times where there's international conflict, right? So every time is not different than the time before. It just has a different headline. It has a different severity to it. So that's something that people try to let cause emotion there, but in reality, it's no different if you think back of all the things that we've been through. Also, there's a lot of other things going on with Apple with the split, and same thing that's happened in the past. So there's no, it's a tough. It's more of a debate, like a kind of a fun talk to have, but statistically, no difference. Yep. How important is the stimulus bill to continuing this rally? One could argue not important at all, right? The rally's just going along. There are no talks of getting any real thing done on stimulus there, and the markets don't seem to care. So you could argue that there's no importance to it at the moment. I think it'd be helpful for the markets. I think it would be hurtful, obviously, for the dollar and helpful for gold, but we'll see. I mean, we just don't have anything to really hit on right now with that. Yep. I love it. When are you going to get to... Yep. No, it's not the government's job. Come on. Yeah, it's your money they're giving you back. I agree with that. With unemployment's solved, I do see a deal in sight. Oh, well, okay. We'll see what happens there. Remember, you got Democrats really just did their party this week. Republicans will do their party. So they're really in kind of campaign mode right now. I don't see any real progress happening. I mean, there's chatter and there's bickering, but it's a tough one. Yeah. Can you pay your management fee from a checking account instead of pulling from your account? Anywhere should allow you to pay by using just a separate account. Some of our customers actually say, got my Roth IRA, that's fine. You take your $4 out of my Roth. Could you please take your $4 or whatever we charge out of an individual account? You could certainly have an individual account set up, put $30 in there or whatever, and we'll pull from that. And I buy the argument to doing that, so I agree. Yep. No problem. You like Teladoc? Teladoc. Nope. There we go. Got to type it right. I like the reversal. Look what happened with Teladoc here. So obviously a big sell-off, huge profit taking after a huge move. That is very normal. You worry about something like that in Apple, and well, we'll see what happens, but Tesla and the like. So you got huge profit taking, but the stock won't quit. See how it recovered more than half of it in a matter of days? You like that. The one thing you worry about is that it goes sideways from here, right? There's a definite possibility that it goes sideways. Think about any other time it's happened. Big sell-off, goes up, and not really much happens for a while. You got to be patient there. So if you own the stock, I wouldn't be like freaking out that it fell and now it recovered. I would just be patient. I think that's the key word there for that stock there. Yeah. Can I roll my 403B to y'all even though I have a loan on it now? Probably not. Nope, not unless you're willing to pay off the loan or you're willing to take it as a distribution. Don't do that, please. There's no benefit to you to do that. Yep. Second week of September, we start up the volume. Yeah, I think the only hiccup there could be if schools start to dial back. I think for the most part, schools are trying to get back and everybody focused, even if it's some online, some in person. I don't care where you stand on that, but if we have mostly in person or some repetitive, Monday, Wednesday, Friday in person, and that's a national kind of a thing, then yeah, I think the volume comes back because parents are able to really get back to work. If parents have to work with their kids home all the time on virtual classes or whatever, I think that presents a little recipe for the markets to be lower volume. Just my opinion. I have no stat on that, obviously. It's never happened before, but that's just kind of what I think. I'll take it one more and then we'll get on the way. And we're going to take Tandra there. Last question. Why there is a record day for a stock split like Apple and Tesla? Well, they didn't split, right? Not yet. So that'll be on the 31st. But they did have good days. So actually, I'm sorry. I'm not sure what the question is there, but you got a year or two left on your loan? Okay, well, that's the right choice. You got to pay that off first. And you're paying yourself back, so it doesn't make sense to take any distribution there. Don't sacrifice anything. I appreciate that you're thinking of us there, but it's only going to hurt you to roll it over now, so take your time on that one. I appreciate you guys hanging out with me. I hope you have a great rest of your day and weekend. We'll be back Monday to do this all over again. Hey, tomorrow, I'm going to post a video, like it or not, on me responding to your comments, some really nasty, some nice, and some educational. So see what you think. That'll post tomorrow morning. And you guys have a great rest of your weekend. See ya.